Yeah, so here is my trade setup for Thursday January, Thursday January 8th. I said I was looking at price to come into this low, which is Tuesday 10 a.m. low. I was anticipating price to take that low, so we can take it long from there. And I made mention of how I don't want price to take or go below 50% of this 4-hour order block. As expected, price hit the 4-hour order block and started rallying. However, on Thursday I took a short instead of a buy trade. So I'm going to go ahead and show you why I took the short and why I didn't take a buy trade. Going lower into 50-minute time frame. Let's take now Friday price action. So here is Thursday. This is the Tuesday 10 a.m. low, as you can see. Tuesday 10 a.m. low was taken at this level. Price came back lower, took it at exactly 9:30, where we prepare ourselves to take a trade. Stopped out Tuesday 10 a.m. low and came into this daily fair value gap. Was this daily fair? I think this is the daily gap. There was a gap on the daily time frame, which I'm going to go ahead and show you now. This gap. This gap. Let's keep the charts clean. But this is a gap. This is a gap showing us price is in hurry, so price didn't have enough time to fill this. So price returned to fill that gap at this level, which was exactly at um, 10 a.m. Yes, it was exactly at 10 a.m. on Thursday. So I looked too short because I expected price to tap once more at that gap. Why? Because I would expect if price is ready to rally, I would expect price to create an SMT at this low. However, price um, left this fair value gap here, so I was interested in taking a shot from there. So I was anticipating to take a shot from here into this low and having an SMT form at this level, so I can potentially prepare myself for the buys, which I was looking at to go into all-time high. However, that was not the case today. Price came at 9:30, took out 10 a.m. London's low, Tuesday 10 a.m. London's low, to Tuesday 10 a.m. low. Sorry, Tuesday 10 a.m. low was rated at exactly 9:30. Created this low for me, which was my first round liquidity for the day. So that was my target, my first target for the day, so my potential target. Yeah, so that was my target for the day. Then I anticipated a shot from this 15-minute fair value. Let's go ahead and share that. Yeah, so let's go down into 1 minute time frame and see how we executed the trade. I took the trade from a 3-minute entry actually. So most times I like to take my trade from 1 minute, most especially when I have a framework from 15 minutes. So I was looking at it from this level. I was looking to trade from this level. However, um, it was not so clean because I was expecting price to inverse this level and use it as an inversion. However, price kept playing around, playing around, playing around, which caused me to ignore 1 minute time frame and go for a bit higher time frame to see if we have some clarity on it. So I went back into 3 minutes, which is pretty much higher than 1 minute, and it is as well a lower time frame. So I took my trade from this level, this 3-minute breaker block. Why did I trust the breaker block? We've tapped into 15-minute fair value gap, then we created this level. It was a previous high. There was a high around this level, which could have deceived buyers and made them go into taking a long at that level. They could have seen this area as a breaker block as well because this was a low swept and all of that. But I knew price was still messing around and price is likely to draw back into this loop, creating SMT on 15 minutes. So I was drawn to the short instead of the long. So I entered from this breaker block. Immediately price closed below. I entered at that level, put my stop just at this candles wick, just this one here. Put my stop there, then I took the trade. Then I was looking to target this area. However, I exited the trade a bit early because we could see price dancing around, dancing around, dancing around, dancing around. I'm not going to sit my ass there and watch a green trade turn into red. So I exited the trade when we came back to this low, which was supposed to be a partial. I exited the trade because I was not comfortable with what price was doing. I was still bullish overall. So that was enough for me to like get out from there, and that was about uh let's check that again. I think it was about 1 point something hour, not the best, 1.3 hour, but I'm just trying to preserve capital because I believe capital preservation is also making money as long as you're not losing you're saving capital. That's also money preservation. So that was my trade setup on Thursday, and that was my only trade for the day. However, price didn't rate the low. We rated the low, but it was not on Thursday. We rated at Asia. You can see price return higher. Yeah, we didn't even rate the low. Price return higher, came back, dance around, came back, dance around, and potentially started moving on Friday. So I'm going to go ahead and remove this and show us the trade breakdown for Friday. So this is why I traded on Friday. Coming into the chart on the daily time frame, this is Friday trade breakdown. So after Thursday, we could see price is still willing to go higher. We tapped into this gap, then we expected this fair value gap on the daily time frame. Gone to my head, price is still willing to go to all-time high, because if price was not willing to go to all-time high, it's not going to respect this fair value gap. So with that said, I started looking for higher prices. So going straight down into 4 hour, after 9 o'clock trading, I could see price trade above this Asian level. This was the Asian session trading range, this high to this low. So what price did was price came, took out the high, confirming for me this is an order block. So confirmed for me this is an order block. However, I'm looking to trade after a liquidity rate, right? So where is the liquidity? Let's say this is 10 and 10 is not, we've not started trading at 10. What would I be looking at as liquidity? Looking at this level, this one here, which is 9 am's, this level, London's low as my area of liquidity, and as well Asian level as my area of liquidity. I wasn't looking at Thursday's low. Why? Because I want Thursday's low to remain standing. I don't want price to take Thursday's low. Why? Because we have an intermediate time low. If we were to take Thursday's low once more, or let's say we take Thursday's low, it's going to create liquidity all around that level, which could be like a trend line liquidity. I don't want that to happen, so I wanted them to keep Thursday's low, and I was looking at Asia low and London's low as my area of liquidity. So going lower is, so I'm going to go ahead and mark Asia. This is London. Also, let's leave it at, this is London. This is London, and this is Asian low. So I'm going to go ahead and leave it at as well. So those were the level I was looking at. So now we're going to go ahead and go into 15-minute time frame and see what we have. As you can see, we look to take our trade at 10. Let's quickly take this and have a clean chart. You see London's low was rated. I didn't trade exactly at 10 today. Why? Because there was news at 10 a.m. which caused me to like delay my trading a little bit. So I wasn't in a hurry for this trade. Why? Because there was news at 10, so I didn't rush myself into the trade. So I waited for the news, and just at the news we could see price came down, rated London, rated Asia. Immediately we rated all that. I was sure price was willing to go higher, so I started tracking price at that level. London's low rated, Asian low rated, giving me confirmation we are now ready to go higher. Another thing I could see at that time was this 1 hour fair value gap. This 1 hour fair value gap. Why did I trust this 1 hour fair value gap? Okay, let's look at the price action just before that. Price went higher, lower, then another higher high, then lower, without taking out this low, showing us this is a bullish pricing. Then we immediately went higher once more, and immediately we went higher. We took out this high, confirming for me this is a break of structure. Now we have a break of structure with what? Displacement. Why is this displacement? This is a gap, a 1 hour fair value gap. So when we have displacement with a gap, it means price is likely to draw back into that gap, then continue higher, right? So we left this 1 hour fair value gap. That was my interest to take my buys. However, I was still anticipating price to take this low, which is London's low, this low, which is Asian low, before potentially running higher. However, I want price to return or close inside of this range while I was tracking price. So going lower into 15-minute time frame once again, this is why I say price expecting the 1 hour fair value gap correctly. We've seen price taking London's low, price taking Asian low. Gone to my head, I was anticipating price to create for us a 15-minute fair value gap, which we finally get. At around 10:30, price created for us this 15-minute fair value gap. It was actually a low probability fair value gap, but I was trusting it because my first entry came from this 1 hour fair value gap. Why? Because there's something we call time frame alignment in trading. When you're looking at 4 hour time frame, you're looking at 15-minute time frame. Then when you're looking at 1 hour time frame, you're looking at 5-minute time frame. Why? Because you want to align price with each other, so you know the best time frame to look at when you're looking at certain time frame. So given that I had this point of interest from the 1 hour time frame, I was looking to execute my trade on 5 minutes. So this was my first trade setup. I'm going to go ahead and remove this just to have a clean chart. So immediately we had London. This is London's low. So immediately we rated Asian's low. I could spot this liquidity sweep on the 5 minutes. Like I said, when you're looking at 1 hour time framework, you'll be looking at 5-minute entry or potentially 5-minute area of interest before 1 minute. But when you're looking at 4 hour framework, you'll be looking at 15-minute point of interest before potentially anticipating for entry on the 1 minute. So with that said, we had this liquidity sweep here, then which tells me that immediately price closes above it, it confirms for me that this is now a breaker block. This is now a breaker block. Low swept, market volume pushed back up, shifting structure, confirming for me this is a breaker block. Price retrace back into that level, and that was our trade. We started running the trade from that level while I was also anticipating the time frame alignment for 4 hours. So this was my drawn liquidity. It was a previous week high, and this was yesterday's high. Sorry, it was my target, and it was as well yesterday's high. However, this area was a key level on the 1 hour. It was a key liquidity level on the 1 hour. This is the level right here. So that was my first target. So I'm going to go ahead and remove that, and this is our final target. However, I had 2 entries on this trade. So here's my second entry. So like I said, I'm going to go ahead and remove this 1 hour fair value gap. So like I said, when you're looking at a 4 hour area of interest, you'll also be anticipating a 15-minute area of interest. See this other block, I made mention of this other block. So let's shade that. So price came into that other block after confirming for us at 9 a.m. 6 a.m. 4 hour candle that this is an order block by closing above it, confirming for us that is an order block. So I started tracking price as well on 15-minute for a potential second entry. So going lower into 15-minute time frame, I'm going to go ahead and take this off. Yeah. So price came, took out Asian low, traded above, then created for us a market structure shift here. This is a market structure shift on the 15 minutes. Market structure shift on the 15 minutes and a fair value gap. So gone to my head, I was interested in taking a buy as well, or should I say had to my buy as well at that level. So going lower into 1 minute time frame, I took my second entry from here, and target just the high. I took my second entry from here. This was my entry, this breaker block, this one here, and my target was just this high for a 2-hour pyramiding into the trading profit. So that was my second trade. Let's take this off, which is my initial first trade. Why did I trust this area? It is a proportion block, not a breaker block, because we didn't rate that low. I was expecting SMT at that low. We didn't get it, but we had an inversion, which is majorly my entry model. We had an inversion at that level, which is majorly my entry model. So I trusted it alongside this proportion block. Then I took the trade to this target, which is my second entry for the day. So that was my trade for Friday. I'll be dropping another video tomorrow, preparing us against the coming week. I hope you learned something from this one. Wish you all a wonderful weekend.